Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, December 22nd, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here that the ES continues to hold right now the midpoint of the previous session. We did have a very strong reversal off the previous low of 35.96. Price rallied the rest of the day here back toward 36.91, the FOMC key level, and we're now trading inside day at 31.61% of average range, just above the previous session's midpoint. We're right inside this range right now. That's really the range, 35.87. You got 37.25 on top, and that's kind of the range we have right now. We're likely to stay in that range with an upward bias here heading into the end of the year. I think short term, keep an eye on 36.60. Failure to hold 36.60 will open up more downside here into the bottom of the range. If it can hold that level, perhaps it kind of drifts higher here. Overall, from a longer term perspective heading into the new year, 35.87 is going to be the key level to watch. That's still the key range high here, and we're forming a box above that high. At some point, if we take it out in January, early February, that will open up 3,400 and 3,200. As of right now, holding above it will keep us drifting higher until proven otherwise. All right, let's take a look now at the NQ. Now the NQ, very similar price action to the ES yesterday. Very strong reversal off the lows. That's the overnight lows where I mentioned that there was a buy signals developing off those lows. They looked like they could lead to a pop higher. The NQ did need a lower low rejection there, but again, inside the PIMA trigger zone, closing back above it. Very bullish overall. Just like the ES, the key level to watch heading into the new year here is going to be that top right there, and that's the 12,465s. 12,465 right there, very important level. You can see it, how it's been in play. It did drop below it and popped, dropped to it and popped. Again, that's going to be an important zone. 12.4 probably just a nice round number there. If we can't hold that level sometime down the road, that could open up a return back to the middle of the key range and down to the low. So 560 on this end, and down here at 10,600 down here. So could be a tremendous decline if we can't hold the market structure here. As of right now, everything continues to drift higher. We continue to see strength overall above 12,800. Could open up another couple of hundred handles into 13K. All right, let's take a look now at crude oil. Now crude oil is down about 1.7% right now. It pulled back tremendously in the previous session. It did form a decent strong low yesterday, but wasn't really able to lift off of that low like the other indexes were. But it was able to hold the previous month's high price. That's important price right there. That's the previous month's high. That's also the breakout point of the narrow 10-day range. It got a breakout. It had a retest and a go. We got between our 49.50 target. It actually hit the R25 here. That's the R25 right there of the previous month's range, and that's precisely where it turned down. So it's between this level and this level right now with an upward bias. Failure to hold 46s could rotate this thing back down, but that'll be the first longer term pullback we've seen. Ever since we had that strong low here to begin November, we've had very, very strong buy the dip opportunities here, and the pullbacks have all been measured to be about 2.5, 3 points. So if you look at this high to this low, this high to this low, right, this high to this low, very similar in size and duration, you know, between 2 and 3 days. So if this market's going to hold 46s here, we may be looking at a continuation to come. On an intraday basis, crude oil needs to start getting back above 47.75. And especially above 48.25, and it starts to open up some of the upside. All right, let's take a look now at gold futures here. Now gold futures is rallying at the moment. This one is doing just enough to remain bullish and continue to push higher. It's quite bullish right now, even though since August here we haven't really seen gold be able to maintain that strength. It's been able to bounce. It's been able to bounce off these lows. It's had some tremendous up days, but each time it's hit with a heavy dose of selling pressure. And in this move so far, we have seen higher lows develop. We've seen higher highs develop. We've seen price reclaim market structure, reclaim the key range low. It's doing everything it needs to do right now to remain bullish. The key level right now, 1850, 1860, if it can continue to hold that zone, opens the door to 1981 here. That's the recent high. 1960 to 1980 will be the next target up above. So right now it's doing just enough to remain bullish here. Again, I would keep an eye on this rejection above 1900 because we have seen this thing trend lower. Every time it pops, it's had those big doses of selling pressure. And right now, we are still seeing strength, but there is still the potential to see a big smackdown. If that happens, I would say 1820 would be a big downside target right here. So overall, this thing continues to trend higher. Continue to watch 1860 for short-term directional bias as this market continues to push higher. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.